MiX Telematics, the owner of MiX, has broken through the £1 billion barrier with its latest year-end results. Revenues grew almost 15% to just over £1 billion. Adjusted headline earnings per share grew by a third to almost 19 cents, and shareholders will be getting an 8-cent per share dividend. So can this growth be continued into next year? Well, joining me now is Stefan Joselowitz. He is the CEO of MiX Telematics. Stefan, welcome.
Thank you for having me.
Well, firstly, let's talk about the growth during the year, and it seems that the momentum that you created in the first half was sustained into the second. What was behind such a good performance?
Well, strong subscriber growth from really all of our divisions contributed, at least at the subscriber line. So we saw very strong annuity growth, which is really the engine room of our business. It's the economic driver. So 577 million rands we finished of annuity revenue. Our US business was a star performer, so it had been loss-making for the previous 2 years since we acquired it. We've been setting it up for this kind of performance, and it's finally delivered. We're very proud of what the team has done there. So that was 200% growth at the top line, and a profit contributor, nearly $2 million, 14 million rands. So all in all, very happy. Just
on the US business, you talk about these mega deals that were struck in the year. So they are starting to pay off for you. I mean, and what then is the trajectory for MiX in the United States? Is it a massive market that you have at your doorstep?
Well, certainly the market is almost beyond imagination. Of course, we're focused on a very small niche of that market, but even that is enormous from our perspective. So the pipeline is looking healthy from the US perspective. In terms of what that market is capable of, it's almost beyond limits. So
Stefan, but what aspect of the market do you have? Because you have a range of services within MiX. I mean, what are you actually selling to the US market?
To ensure that business the costs were contained and the losses were contained in the first 2 years, we really cut it back to a very tightly focused business. So we took a strategic decision to focus on oil and gas. We were geographically well positioned, and it was an area where we had a lot of success with some of the American-owned companies in the Middle East.
Okay.
So it was a natural progression for us. So we've been very focused on the oil and gas industry. The 2 mega deals that we did win in this last year are in that sector. So they're both NASDAQ listed exploration companies, and one was for nearly 10,000 vehicles, the other one for 3,500 vehicles. So these are substantial deals in themselves, and we've got a few more of those that we're working on at the moment. So it's looking reasonably healthy.
But it would be in a particular aspect of your business, so not necessarily the stolen vehicle recovery.
No, in fact, it's not stolen vehicle recovery at all.
Okay.
All of our international businesses are currently fleet management. So it's the advanced fleet management side of our business. Currently, we only do our stolen vehicle recovery services in South Africa. We are looking to change that, so we are looking to globalize our stolen vehicle recovery business, but we haven't taken that step yet.
Which areas, which geographies would you be looking at?
Well, certainly not first world geography. So it wouldn't be the United States, it wouldn't be Europe. They're not conducive to that kind of operation. A, they don't have the crime problem, and B, they've got very sophisticated, efficient police services, etc. So it would be certainly in developing countries, probably in South America or the Eastern Bloc would be the most logical choice.
Are you close to making any sort of acquisitions or announcing any sort of deals there?
We're not close to making any acquisitions. We're close to a decision point on where our next rollout will be. So we expect to make that decision probably in the next quarter, and we'll start moving from there. We, however, don't expect our stolen vehicle recovery business to deliver international revenues in this financial year. It'll take this year to probably set it up, so to speak, and be ready for the next year.
Just on stolen vehicle recoveries, you've developed something in the South African market called BeamE, and you say this was attributable for the decline in earnings in the South African business that we saw over the year.
Yeah.
Tell us about it, because you seem to be very excited about this product and the potential for
I'm excited. It's a great product. It's been many years in the making, so we've invested a lot of time, effort, and expense in getting it to where it is. It's taken a lot of research. It is a very low cost. It's a low cost device, very small, wireless. It's completely self-contained. So another advantage is it doesn't need physical wiring into a motor vehicle. It doesn't need a power source. So installation costs are much lower. We don't need professional installation, and because it doesn't need a power source, it also opens up a much broader range of installation opportunities, not just engine motor vehicles, but could be trailers, caravans, watercraft, motorbikes, etc. So a lot of opportunities there, and we can aggressively price it and still make a decent margin.
Well, who are you going to be coming up in the sector, in this particular aspect of the business?
In the South African market?
Yeah.
Our typical competitors would be Tracker and Netstar, the big players in the low-cost, high-volume sector of the market. And it's a space we typically haven't played in before. So.
Have you not played in it because you haven't had a product to compete, or were there other factors?
Yes, no, I think that's correct. Our MiX product, which is really the brand that we built this business on, is a high-end niche player, so it's a value-added services play. Our services are aimed at a specific market. It's not just stolen vehicle recovery. We build in a lot of personal and occupant family safety into that product, so the costs around delivering that service are higher. And frankly, we can't compete in that space with the MiX product and make a decent margin. So
now you have the product.
And now we have the ability to do that. So,
okay,
we have an extra string to our bow, so to speak.
So we'll need to watch this closely in the year ahead. In Africa, it seems that the growth has got to a point where you've actually had to you've had to rejig your management team somewhat. Tell us a bit about how the growth has necessitated a bit of a change in the business, where you've actually appointed certain individuals in charge of certain aspects of the business.
So our African business, we integrated when we acquired the OmniBridge business 5 years ago. We integrated their fleet business into our stolen vehicle recovery business, and there were good advantages in doing that. We got a lot of efficiencies out of it, but they've both now grown to a point in Africa where we believe that unique focus is required on each business to extract full value out of them. So we've appointed two new guys to our executive, and they're both experienced campaigners within our business, so they were both internal appointments. Pretorius is heading up the fleet business. Brendan Horan is going to be looking after our consumer business now, so they now get dedicated focus, which we think is right for our strategy going forward.
And would you say that the potential for growth for MiX is vast?
Oh, absolutely. I think we've got a very strong annuity component generating strong cash flows. We've got an experienced management team, and we think we're well shaped for the future.
Stefan, what percentage of your revenue and of your earnings is derived from your African businesses?
About 50% plus minus. It's about half of our business now is out of our African businesses in total. That's both our consumer business and our fleet business in Africa, and plus minus 50% comes from our international businesses.
On the dividend, you've been quite generous, upping it by a third, but does that account for the dividend withholding tax, and maybe actually retail investors will be getting a little bit less?
Absolutely. But one other thing we have done, of course, is that we have changed our policy, that the board has decided to pay, or we're planning to pay, an interim dividend as well now. So we will be looking at this position at our interims in November, announcing in November, paying in December. So that's another exciting bit of news for shareholders.
Certainly it is. And does it take into account your cash flow needs? I mean, you're not going to find yourself in a cash crunch, given that the company is in a high growth phase.
Yeah, Juliet, at the moment, we finished the year with 47 million in the bank, or 46 million, I beg your pardon. I think 40 million up on the previous year. That's net cash, that's minus just subtracting a little bit of debt that we've got. So our balance sheet is extremely conservative, so to speak. We don't have an immediate acquisition on the pipeline, but we've got our eyes out, and if something comes along, we'll pounce, and I think we've certainly got capacity to fund it if we need to do it. So we'll keep an eye out.
All right, we have to leave it there. Thanks very much for joining us.
Thank you for having me.
That's Stefan Joselowitz. He is the CEO of MiX Telematics.